go to the board meeting and the committee meetings, and then when this comes up under the appropriate agenda item, continue.
No, I think so.
So,
Can we start with the audit
I don't know,
committee?
can we start?
Yeah.
We
yeah, we waited.
Can we do the audit committee first? So
Yeah,
we can
we can start.
Yeah, all right. I'd like to open the Hudson IDA meeting for March 5th.
Gonna have the audit committee first.
All right,
Thank you.
so we'll start. Should we call the meeting to order and then break? Do we want to do a roll call?
Paul Johnson,
Present.
Heather Campbell, present. Cheryl Tesluka, present. Randall Martin, Dominic Moranti, is on Zoom. Charles Millar,
Present.
Margaret Morris.
Present.
You have a quorum.
All right, we'll now ask that the audit committee open their meeting, and I'd like to pause the general meeting. Get a motion in a second. Second. All in favor?
So we're gonna
Randall,
do
you're
the
the chair.
audit financial.
So the audit committee, Lisa,
You don't see the audit committee?
I don't have the agenda.
It's-
Yeah.
Here, Mike.
Okay, so all right, so I see, so first on our agenda is a 2024 audit of financials and related documents. Get the minutes. Should we approve the minutes from January 22nd?
I'll make a motion.
All in favor?
Aye.
Any questions regarding the 2024 audit of financials related documents?
We're gonna have a presentation.
Presentation.
I believe you all received a draft copy of the 2024
Will you
financials.
introduce yourself?
Oh, yes. My name is Patricia Brennan, who's Patty. I'm with RBT CPA. We are your external auditor. As an external auditor, our objective primarily is to opine on your financial statements, that they are free from material misstatement. If you refer to your draft, your financial statements, your audit opinion does begin on page 1. The opinion said it is free from material misstatements. If at any point you have questions, please interrupt me. After the audit opinion follows your management discussion analysis. This is a comparative analysis that would provide any further detail that the agency could provide to the reader of the financial statements. There are standard requirements in this management discussion analysis, and those are what you see included in this document. The page number 6 is your net position. This more or less shows your assets and your liabilities and your net position as of year end. You see here is a comparative financial statement. The significant change here is the sale of land for 23 to 24. Other than that, your assets are consistent with prior, that one exception, and the same as your liabilities, consistent with the prior year. Over to page 7, this is your statement of activities. This shows your revenues for operations as well as the expenses. And again, Most significant change here is your 2023. There was additional revenues related to one particular project, I believe, in fiscal year 23. So in 24, because there is no additional projects added in, you won't see that revenue reflected there. Moving forward, your operating expenses remain consistent. Non-operating expenses, again, the only shift and change is the disposal of the asset. Following that is page 8 is your cash flow. This shows an analysis of the cash flow through your agency throughout the fiscal year. And it is a reflection of the operation. So that would be operating revenues and expenses. On page 9 are your footnote disclosures. These are required disclosures and they remain compliant with government account policies. We will also update on page 10 subsequent events. If there are any items that would impact the future financial statements of the agency, they need to be disclosed here. It is dated as of a particular date, and we'll release these as a final statement. So that's why the date is highlighted right now. We're holding it, not that we see the future. Just new accounting standards that will be issued into next fiscal year that, if applicable, the agency would adopt. Some of those most significant accounting standards, I do not project that they would impact Hudson IDA. Over to page 11, this is a supplemental schedule that reflects the current projects and the collections and the pilots on those projects and the current FTEs. We did create the projects that have been implemented in there. Currently, I don't think they're at that state of completion, so they're not reflected there because you're not currently collecting on those pilots at this point in time. But it does reflect property taxes with after pilot and then the current collections. If you look at the total amount that is under the first project there, the $194,000, you can actually tie that out to the total amount that is due out under liability on the statement of net position. Back to page 6. You'll see the $194,000 is a liability that is due to property taxes due to your county school. That is your audit report on internal controls. We are required as a governmental agency, your internal controls do need to be audited. So we do the review process and you have to report on any findings and any items we know in non-compliance. Non-compliance is not in areas such as control testing or substantive testing throughout the audit. With non-compliance, we do create a population sample. And if that population has one item that's a deviation, it's considered non-compliance. There is no gray area where we consider this an isolated incident. It's either you're compliant or you're non-compliant. There are 2 areas that we know that are non-compliant for an IDA. One is the filing of the annual report. I believe the supporting documentation that we obtained. The annual report was filed on April 3rd, when it is due on March 31st. Now, we all know that's very close again, because non-compliance is
Non-compliant.
it's either yes or a no. That's reported there. The second is
It's April
3rd. So due March 31st, April 3rd. That is
March 31st was a Sunday and April 3rd was a Wednesday.
yeah.
So we had Monday, we're only 2 days late.
But there were no penalties assessed.
No, there is no penalties. And several areas of compliance in law does not result in a penalty. It's just that the requirement of law that I file action to be taken. That's one of them. Second item that's noticed as a finding is collateral. Hudson IDA currently is being collateralized under the city. The bank has confirmed this. There is collateral, but it is a requirement that the Hudson IDA in its own EIN have collateral coverage from the financial institution. I don't perceive the bank having an issue with being able to provide that. It's usually quite common that they should have issue the collateral. I think that discussions with the treasurer. It may be a result of just in historically in the past, it wasn't a concern because the collateralization limit is below a $250,000 threshold.
We were for a long time with 10 grand at the bank, so, but we can look at that.
And
We've had trouble with certain banks wanting to collateralize, but I think cities have a better relationship with banks because they're used to it, but when a not-for-profit asks for it, they.
Yeah, nonprofits are different.
Yeah.
But usually governmental, you hear the word, I take all my accounts, they're like, okay, collateral. Next document I'd like to bring to your attention is the board report. There is a change in this board report, if I could share it. Pass it down. The board report is a communication that's required to the board. In a couple of areas, we are required to communicate, like were there any disagreements with management? Were there any estimates that we disagreed with that have biases? Also, in particular, like to use in this document a communication areas that we believe suggestion areas for improvement. They're not at the level of a finding that would impact our financial statements or non-compliance, but just in their suggestion. In the initial draft, we do have 2 findings. We do repeat the findings of compliance in this report, but that's not where I like to draw your attention. I can draw your attention to our management suggestions because those we did not previously discuss. So on page 6, the management suggestion initially has worded to reflect that you're not in compliance. That's an IDA. You are in compliance. That's an IDA is required to be in compliance with ABO. With the policies it adopts, it is in compliance with the ABO requirements. The initial fine suggestion suggested the Hudson IDA was not, but that's not correct because we're referring it to a set of recommended policies that are not, the IDA does not fall under that umbrella for non-com reporting purposes. You fall under your umbrella for ABO reporting purposes, and you do have all those policies adopted and accepted. Just want to reflect that there and bring it to your attention that that policy wording will be changed. The recommendation that a disaster recovery plan does stand just because today's world everything is electronic, digital. What do you do to recover your cloud?
Well, and we have a policy, the city IDA contracts with Columbia Economic Development, and we do have a cybersecurity policy.
Okay.
Because they don't, we maintain their records. So I can get you that to clean up that.
Yeah. We can look at that, see if that if it falls, if the board accepts that policy as their own, there's no reason why as.
But we could accept the city's policy as our own too.
Cybersecurity, that generally talks about intrusion, cyber intrusion. Do we have a full backup?
We're on the cloud, we have insurance, but I think the issue is why you don't see it here is because there is no office, there is no staff. They're contracting with a third party, anybody else to do the work.
Yeah. Very often, like several of your Hudson IDA's policies are in fact the city of Hudson's policy, which
Right.
is acceptable.
And as you pointed out, we are I will argue this, folks. We are in the first paragraph of your report, we're something of government, we're a component part of government.
Component units of
So I would think that if the city has those policies, we could certainly.
Which cloud? Is that Microsoft Azure?
We have a third party, we have a server and then we have a third party backup. And now we're going to a cloud, but we pay $20,000 a year for a third party computer person.
So in this scenario, I'm just running through my head, Hudson IDA's information is split between living on the accounting software lives on one cloud, and then all the other documentation lives on, just embracing that as an acknowledgement, but Intuit does provide a cloud services for backup purposes. So we're no longer using desktop versions that now need to incorporate 2 policies necessarily, because it's not like you need Hudson for a desktop version and I need for another.
And we actually pay for the, as part of our administrative expense, the cloud platform, QuickBooks for the IDA.
But should there not also be a disaster recovery fund in the event of that failure?
Well, we have that, I mean,
Because there's a finding here.
there's certain say we don't, yeah. I think when they were looking at it, because the IDA itself doesn't have those things, but they have them through contractual relationships.
So, I would think that they would like to see that the board adopts that policy, then if we consider that policy that's being followed, so in the event of a disaster, we default this policy, but this policy tell us how to recover our. It's with the Hudson IDA, because there is no physical location, there are no employees, it's all cloud, electronic documentation we're trying to recover.
Right, but whatever the third party is, right, that's maintaining the information, no, hang on, that's maintaining the information with cloud, they need to show us what their disaster recovery plan is. That's the point. And it's not just that it's on the cloud, so therefore we can talk about it, it's in the event of disaster, what's it do, it's disaster recovery.
It's step one, but step two, who we call it, who are we there? So that's the questions, that does conclude my presentation.
Thank you.
Thank you. Thank you.
Thanks, Betty.
Back to work, right?
Yeah, I'm gonna excuse myself. I need to return to the office.
Well, thank you.
Okay, any other further questions about the, evaluation that we received? Any public comments? Okay, I ask for a motion.
To approve, right? Yeah. You're gonna approve your.
Recommend the approval.
Okay, so, yeah,
Yeah.
Second,
thank you. Okay, so I need a motion to close the audit committee.
I'll make a motion.
All in favor?
Aye. All right, I'll need a motion and a second to restart the general meeting. Everybody at once.
Make a motion.
And you'll call a meeting, governance committee.
All right. We will pause again for the opening of the governance committee.
And it's the governance committee, March 5th. First, we need a motion to approve the minutes from March 6, 2024 and January 2025. This is Kamal and Dominic on the committee, so I have a motion.
I'll make the motion.
Dominic, do you have a second?
He can.
You can second.
Okay.
Second, so minutes are accepted. We have a statement of internal controls, and we just need a motion to approve and accept that statement. It's the last page here.
I'll make that motion.
Second. Then we have the governance committee evaluation, that's the last page. It's the summary of the evaluations that we completed. I just need a motion to accept that evaluation.
I'll make the motion.
Second. And then any public comments for the governance committee? Motion
I'll
to
make a
adjourn.
motion to adjourn.
Second.
Turn to our general meeting.
The administrative director's report.
All right, let's go into administrative director's report.
Thank you very much, Mr. Chairman. We have several updates on various projects. The first is Providence Hall and Skylar Court. Those are the two Section 8 projects that K&R Development they have purchased them. They did receive their final approvals from HUD, and they're moving forward with financing, doing project financing. And as part of that process, they will ultimately close with the IDA so that they have the benefit of the sales tax exemption and the mortgage tax exemption and the pilot that was approved last year. Any comment, Chris, on Skylar Court?
No, I don't have any further information from Alyssa, so.
they're very happy that they finally got through the HUD process and appreciated the support of the IDA and validating the project and the need for it in Hudson so that these units don't go market.
So I know we talked about this before, but they own
They own
property,
it.
right? But they're still exempt, so for the window of time between when they purchased it and when they get the IDA exemption, they should be on the tax roll, correct?
Yeah.
So,
And they realized that, and they decided that because they would be paying taxes under the pilot as if they did not have the benefit of a pilot, that it would be a wash for them. Because they knew that the assessment would change as a result of the sale. We made that clear that if they needed to close with the IDA before February 28th, if they wanted to have the pilot kick in. So they know that they're going to be assessed and put back on the tax roll.
okay, so they'll need to go back on the tax roll, and then we'll need to do a prorate for the period of time when they sold it till.
The second project is the Depot District project, but I'd like to just give a report on the projects that don't have discussion. The Cassetta Group, the owners of 601 Union Street, formerly the Elks Club, they have submitted, we've had a review of a draft application. I anticipate that they will submit an application to the IDA in sufficient time for us to have you receive it before the April meeting. It's a 40-room hotel with banquet facilities, and it's a $25 million plus project. And so they obviously are looking for a sales tax exemption, a mortgage tax exemption, and a pilot, but they have not identified the terms of what type of a pilot they would be looking for. Chris, could you go on the copier? I printed out some information on hotels. I did do a brief analysis for you to take with you of the number of hotels in the city. We used properties that were classified as a hotel on the tax roll as the criteria, because there's many Airbnbs that are advertising as hotels if you go on Expedia. What we did is we took, I think we used March 12th, it was random Wednesday for rates, and we used July 4th for rates. So you can see the jump in the market for weekends and holidays versus a random day in the winter. And what we did do is we put them in buckets, and it's almost a bell curve. There's 3 hotels under $150. There's 3 hotels over $300, and the other 6 are in the center. It's just background information for you as we begin. Yes, the conversation for a hotel.
Let's go around. Close. Let's start.
So you can see on March 12th, you can get and these are properties that are classified as hotels on the tax rolls. Get a room at the Nest or St. Charles under $115, 150 to 200 at the Howard, Farmer and Son, Hudson Whaler and Wick. And you can spend a lot of money at the Rivertown, Amelia, and the Macon. You can see how they adjust the average room rate needs to be divided by the number of rooms there. So that number needs to be corrected. In other words, the 683 divided by 9 is sorry, by 3. 683 divided by 3 It's $227 is the average room rate. The average room rate below is correct at $410 for the July 4th night. And we did show on the fact that right now there are 184 hotel rooms. There are 40 that have been approved at the Pocketbook Factory. There are 30 or 40 that you have coming on 4th Street.
30.
30. That brings up to 70 that are in progress. And with the Caseta anticipated project and for potential of the Hudson McKinstry project coming back to us, that project was approved, but the approvals have expired from the IDA because of the passage of time. There'd be another 90. You'd end up if all of the anticipated proposed projects come online, you'd be at 344 hotel rooms. It's just background for you to start to think about the discussion of future hotels.
Did you look at the occupancy?
We can't get that data because we're not a big enough market. Give it to Albany, those hotels all report to a service. But we would have to, I would guess, it's somewhere between 50 and 60%, just on the
I
basis.
think that's a really important metric,
I'm not
as we're looking at increasing hotel rooms.
Yeah, I think we have to get them to, there's no source of that information where it's reported by a service. We could ask each of the hotels and if
But there are
willing,
only 9 of them, we could
if
ask.
they're willing to give it.
For these 2 dates, are you willing to give us the occupancy rate?
And we might say, give it to us, and we can blend it so that it's, sure they don't want their competitor to know what the occupancy rate is.
Right.
Okay. We'll
Yeah,
work on
but if
that.
we had an overall of the,
I also am looking at assessments and that information because, value per room is something that we looked at when we were doing the pilot for the WIC at the county originally. But again, this is just so that we're not giving you information the day of a discussion about something, and you can ask us for additional information like you just had. We could go to the top of Warren Street project, Mr. Chairman, and then go back to the depot district. In your packet, there is a short environmental form and a resolution for you to consider to authorize financial assistance. Chris, could you walk us through?
so Mike, that's in this packet that we have
Yes.
for this.
So in the
page
packet, I'm sorry,
74 and 75.
Mike, you're looking at Crescent right now, right?
Yes.
Okay, so you should have a short EAF that just outlines the project that's being proposed. And we have a part 2 completed for review that just indicates no impacts are expected. This is primarily work that's inside the building. And the solar panels are going on the roof. They have received, I believe, I understand they have received the approval from the historic preservation, so that they have addressed those issues with that board. So this board's review then is just to determine for your purposes, because they did, because this was not according to review for anybody else. So this is for you to decide that there's a resolution to approve the finding of a negative declaration. And there's a note in the negative declaration, part 3, that the historic review was completed by the HBC, which really is for reference. So you would want to review that part 2 and 3, and act on the resolution, the seeker resolution, before you consider the financial approval resolution, and then we can walk through the financial approval resolution.
suggesting we do a resolution on the seeker.
Yes, can we take that first to make sure that we don't miss that? And that's in your packet.
It's on page 7.
For the
Page 70.
70.
It's like the last three
It's so-
pages, literally the
it's
last
so-
page of the packet.
Sorry.
No, are there public transportation services available? Does Hudson even have public transportation services? They should go to
The county.
But it's gonna help anybody to get to Crescent or away from Crescent.
Yeah. Chris, could you give an update on your planning and zoning board and why, you're not doing any exterior work, so you didn't need planning board, or site approval?
Yeah, no planning board approval required. So our agency, overseeing agency was Historic Preservation Commission. They previously looked at the secret. There's really nothing that we're doing outside the building to cause any environmental disruption. So they're determined it was a type 2 and a negative declaration.
So the our HPC gave you a certificate of appropriateness?
Yes.
And that was included, we have a copy of that.
Yes, we do. And Lisa, in the resolution, there is a reference to the date of the environmental assessment form, and that is 2/27. So when you are attending to the minutes, if you could just make that note. Thank you.
Resolution of the City of Hudson Industrial Development Agency approving a negative declaration with respect to certain project proposed by the Temple Warren Street Property Brothers LLC at 750 to 752 Warren Street, Hudson, New York. Take a motion in a second.
So move.
Do we need a roll call vote on this?
Yes, please.
Paul Johnson,
Aye.
Heather Campbell,
Aye.
Cheryl Kozlowska,
Aye.
Randall Martin,
Aye.
Dominic Moranti is absent. Charles Millar,
All right.
Margaret Morris.
Aye.
That approval.
And now if we could turn to the approving resolution, I would like to just quickly go through that with you. First of all, if we could turn to the special project conditions at Exhibit A. I don't know, are you projecting this, Mike, or are people just paging through? Can you find it for them in the packet?
56 is the resolution.
So it's right before, the Exhibit A is right before the seeker stuff that we were just looking at, okay?
We have master numbers on the pages, I think it's 56.
Okay. So that's Exhibit A, special project conditions. So this describes the project, and these would be the conditions that would be in the agreements that are being proposed. And if you may recall, we have standard forms of agreements that we have previously approved as part of our uniform project agreement.
Sorry,
Chris, we're gotta get on the right page here.
55
Sure
is
thing.
actually about seven.
Correct, it's 56.
Oh, yeah, it's in the phone. Oh, yeah. Okay.
Okay,
It says 1, but it's also 56 in the corner.
Oh, that's what I was about. That was a feature of the CEDC board wanting to be able to have a consistent packet number, not the number of the page of the document.
Yeah, makes sense.
okay. So the project, this is project, so it describes the, reconstruction, renovation and equipment, 18,000 square foot building, and a 0.14 acre site, existing improvements at 750, 752, plus an approximately 3,000, square foot rooftop addition. And then the commercial space uses proposed to be office space, rooftop event space, multifamily 3 live work rental units, and gallery space. That portion of gallery space is limited because anything that becomes a retail use if we have more than 33%, which this is not projected to be, then we would need to review additional findings. So that's why the 33%. The pilot schedule, as Mike indicated in the public hearing discussion, is based on the 10-year pilot, but it's proposed to be a fixed schedule. So these would be the payments that would be made. And as typical and as consistent with our uniform policy, the first year begins, the pilot payments that are based on this year one payment would begin following completion of the project. So until that time, the project, once it's eligible for pilot, once it's filed its documents and it passes its taxable status date, we close essentially, then it would be paying full taxes until the completion. And then it would switch over to this 10-year schedule. So that's the way this works. They're paying full taxes until the project is complete. And so that's what that base period discussion is about. And then as always, and consistent with our uniform project agreement and the statutory requirements, we have a recapture provision, completion deadline of 36 months from the agency project agreement. That would be our closing. Employment levels are 1 retained and 1 additional. And then the recapture events are our typical recapture events. The recapture schedule is just based on the pilot, so that it follows the number of years of the pilot and has decreasing amounts based on the number of years we proceed from closing. And the uniform policy requires the commitment to work with the agency with respect to posting job hiring with the various entities listed here, posting and so forth. So those are sort of the minimal job posting requirements. And then quarterly reporting is required, and that's filed with CEDC, and then they in turn are assisting with the ABO compliance. So that's the project description. Now, if you could, I'm sorry, I just thought it'd be helpful to go through the project first. So then if you could go back up to the beginning of the resolution. Mike, I don't know what page that is in your packet there.
56.
Thank you.
Page 6.
So the resolution describes the project and indicates that the 10-year pilot is proposed, referring back to that schedule we just reviewed. And the proposal is to the numbers that are in this resolution are the 8,704,000 eligibility for sales tax, the 10 million eligibility for mortgage tax exemption, and let's see, and the pilot schedule that's proposed in the attached, the 10-year pilot that's proposed in the attached schedule. So our findings are based on the application, that the applicant certified that it is in compliance with existing state and federal tax, worker protection, environmental laws, that we did hold a public hearing and notice was provided to the taxing jurisdictions of the deviation. Again, the deviation is based on the fact that they have requested a fixed payment rather than a payment that's a percentage-based amount. And so the board, this recites the board seeker determination that you just went through. So the agreements, let's go to the documents that would be entered into that are being approved here are essentially the standard form agreements that we have, the IDA structure, which is the lease agreement from the company to the agency, and then the lease back from the agency to the company. That's what allows for the pilot structure. And then we have the uniform project assistance agreement that describes the project financial assistance that's being provided, and the separate pilot agreement that specifically relates to the pilot, and an agency agreement that specifically relates to the sales tax and the specific sales tax reporting and filing requirements. And so those agreements are what we would be entering into. We would also, in the case of the mortgage, be a signatory to the mortgage. We have some standard provisions for joinder to protect the agency. And so the findings, this goes to then, based on all of that information, the findings are the recitation of the information about the city, the job proposals. Actually, I think there's a mistake here, Mike. Wasn't it one retention and one additional full-time job?
Chris?
Is that what you said in
sure.
the evaluation? Was it one additional full-time job for this one or two?
I think there were two because there are no jobs there now.
So,
Can I jump in? It is actually 1 and 1, because the additional full-time equivalent may come from 2 part-time. So I think that may be the confusion.
yeah, so could we make a correction, Lisa, that should say one additional full-time? That is what was in the prior review, I believe that Mike went through. And then, pardon me? So that in item C, Lisa, okay? And then the 10-year pilot, the estimated 14.7 million in private sector investment, and their expected completion date is in 2027. Again, the agreements would allow for 3 years, but the expectation is April 2027. And as Mike reviewed the cost benefit analysis previously, the 2.61 is based on the region per dollar. And this is for redevelopment of an older building that's been vacant for over 10 years. And so then the board then makes findings that this is a project consistent with the definition of a project in the statute. So it has statutory authority to provide financial assistance for the project. As always, the board needs to determine that this will not result in the removal of a project from another part of the state because you're not meant to be trying to induce people to move. And then this is it is intended to overall increase employment opportunities and further the purposes of the agencies. And that the expectation is that the project would have a positive impact on the city and the employment in the city. And that it is the tax exemptions would be intended to promote the economic welfare of the citizens of the city. And so these are determinations that the IDA would be making, that the execution of the documents is necessary for the project to be financially feasible, would result in substantial capital investment, and is in the best interest of the residents. So then the determinations of the board include the approval of the project documents that we've just discussed, and the authorization for the officers of the agency to execute the appropriate documents for that to happen. Okay. Any questions?
So I do have questions about, come back to Heather's comment earlier about the fixed rate pilot.
I did an analysis while we were talking. If you increase the assessed value by 2% a year for the 10 years, year 11, it's $1 million more in assessed value. And at the estimated 35%, the $35 tax rate, which it was $1 million more it was $30,000 more in taxes. So if you added that to what it was 85 in year 11, it'd be 115, 120.
Sorry, say that again?
If I
I'm
increase-
having
by-
trouble visualizing.
If the assessment increased by 2% a year hypothetically,
Right.
in year 11, it'd be $30,000 more a year in taxes than shown on the schedule. Because they're gonna go off the tax
Right,
exemption.
and overall, year by year, what would the differential be?
2%. I use 2%, so it'd be different every year, but.
No, but it's a fixed schedule, so.
Right.
So what would the change be in that fixed schedule? You increase it by 2% each year?
that's not what he's saying.
I know.
We're talking about the jump off pilot. He's
Yeah.
saying if they stayed at the fixed schedule, all things being equal, if the assessment value never changed, their payment, their first full tax payment would be roughly 83,000. That's year 11 in that schedule.
I see.
And what he's saying is that if you assume a 2% increase per year, that 83 would jump another 35 or so, bring them up to about 110, 120. That's assuming that 2% is reasonable, but you know, when you look at how quickly the, what do you call these things? The rates, the
Depreciation and values.
No, 71% that we're at.
Oh, the equalization rate.
When you look at the equalization rates, they are climbing significantly higher than 2% a year, so. I mean, we can't predict the future, I'm just saying, like, I would hate to be in a situation like I know other IDAs 10 or 15 years ago where, you know, they stay there until they actually have to pay the real tax, and then the jump is so high that they go, okay, fine. And then we just subsidize, you know, 10 years of something for, you know, long-term benefit. So that's my
Yeah.
concern,
Right, that's
you
a
know.
valid concern.
I think the issue is to the extent that you try to estimate what that would be, you're no more different than leaving it flat, number one. And number two, it could go down, could have a recession. I mean, we're at high market values. Look at Florida right now, you get a condo for 70 cents on the dollar. So, you know, you have to make some estimates and some guesses. I do think that we want to maybe perhaps look at what that cliff is and, you know, evaluate, you know, if it was $500,000, if it was structured so that the cliff was $500,000, well, I think you'd be concerned. But, you know, I think that it's kind of your biggest risk at an IDA is approving a project, not knowing what someone else might do with the project if someone else came in and, you know, tore that building down and built a high-rise hotel. But, you know, probably the planning board wouldn't allow that, but, you know, I think that,
I also just think it's important to have this discussion.
Yeah.
For the applicant to realize that that year 11 is not set in stone at all. And that there's enough variables that have happened over the last decade to indicate that that's probably not a realistic number. Recession and alien invasion notwithstanding.
and you need to watch that every year and anticipate what that jump's going to be so you don't go out of business.